All right, everyone. Thanks for joining us. This is Greg Sally. I'm here with my fellow managing director, John Long.
Hi, everybody.
So welcome to the Platinum Fund 2 webinar. We're going to talk a little bit about our innovative and proven investment model for luxury vacation residences. It works with an initial investment that starts around $218,500 for a fund that's raising $50 million to acquire 16 luxury vacation residences in the U.S. and internationally. The homes are professionally managed. That frees up investors from that responsibility. Our investors receive monetary dividends and rent-free vacations from their stay. And after 10 years, we look to liquidate the portfolio and return the original investment plus 80% of the gains back to investors. We offset the operating costs by renting the homes when they're not being occupied by investors. And we leverage strategic partnerships to give investors access to thousands of homes outside of just the portfolios that we own and operate. A little background about Equity Residences and our origins. So we were founded about 12 years ago now. Over that time, we've launched 3 funds, including the current fund, Equity Platinum Fund 2. We have 35 homes owned or under contract, on our way to 50, and roughly $100 million under management across that portfolio.
Thanks for joining today. During this webinar today, Greg and I are going to review the target Equity Platinum Fund 2 destinations and the current Equity Residences home portfolio that you would have available to you as a Platinum Fund investor. We're also going to go through our investment philosophy, the annual expenses and returns, and how much you can save for vacationing per night. And then ultimately how you make money with us, because this is a real estate private equity fund, and we're going to go through the economics and how the investment works. In addition, we'll go through how often you get to use the homes and then the experience when you vacation, because we know that the usage of the homes is equally as important as the investment in the portfolio. So to start, the target Equity Platinum Fund 2 destinations include ski properties, beach properties, Caribbean properties, European properties, Hawaiian properties. So you'll see from this example list, we've got Jackson Hole in Aspen, Napa Sonoma, Southern Cal, a few Hawaii properties, Punta de Mita in Mexico and Costa Rica, several properties in the Caribbean for East Coast investors and ease of access. We have the Bahamas, Turks and Caicos, Anguilla, Grand Cayman, and Belize. And then in Europe, Paris and Greece, will be added to the portfolio or similar type of European destinations. Now, this is an example portfolio. At the end of the day, it's about real estate investment. And so we look for the best value, the best investments, and a return for our investors. So for example, Jackson Hole could become Big Sky, Aspen could become Vail, but the portfolio is very similar to the mix of properties that we're looking for investors. And then we find the right investment opportunities given the timeline of when we're investing.
A little bit about how we buy those homes. So we use a variety of methods to find good investments. For one, we're analyzing multiple markets simultaneously to identify the best opportunities. We're able to work with developers to custom design residences, such as what we did in Nuovo Vallarta for our Platinum Fund, where we custom designed a 6-bedroom to really optimize it for the fund, as well as to drive cap rates. Another example is a penthouse we're buying in Reserva Conchal in Costa Rica, where again, this is both for Platinum Fund and Platinum Fund 2, and we were able to custom design and optimize that to maximize the cap rate and return on investment for those funds. We also, in some cases, look at value-added additions. So our home in Punta de Mita, Mexico, we bought it as a 5-bedroom villa that we were able to make some modifications and turn that into a 7-bedroom villa. In the case of Anguilla, we were able to take a 5-bedroom home, do a pretty significant 1,000 square foot addition to it, add a ton of living space, but also add an additional 6th bedroom and extra bathroom to the villa to make it much more usable, functional, and increase the value both from a cap rate perspective and from an investment return perspective.
So before we go into the details of how the fund works and the investment model, we're going to walk you through our current property portfolio of Equity Platinum Fund 2 and Equity Residences. Before I get started on this slide, Crocus Bay in Anguilla, just want to let you know that there is a chat function in the webinar. We will be doing a Q&A at the end of the webinar, but feel free to queue up your questions now. And if it's relevant to as we go through, we'll be answering some of the questions as we go, and we'll be handling most of the Q&A at the end. But please feel free to put some chat in the chat if you'd like to get started. One of our recent acquisitions is in Anguilla, and as Greg mentioned, this was a value add acquisition. We acquired a 5-bedroom villa in Anguilla, added 1,000 square foot living room space, and added a new infinity pool. So this photo here is the brand new infinity pool added to the villa, along with adding a 6th bedroom. We converted a media room into a 6th bunk room, and then converted outdoor living space into enclosed living room. The property is gorgeous. It sits up on Crocus Bay in Anguilla, short walk down to the beach. So this resort has 8 villas. It has resort amenities. They recently relaunched the resort and are adding beach service on both Rendezvous Bay and Crocus Bay. So you have beach chairs, umbrellas, a beach attendant bringing you wet towels and water bottles. There's a small restaurant on property as well as a fitness center. And you fly into Anguilla or St. Martin and take a ferry. And for those that haven't been to Anguilla, it is actually one of my new favorite places in the Caribbean. It's a little kind of out of the way in the Caribbean, but it's spectacular. Amazing beaches all around the island, amazing food and beverage and chefs, and just great experiences. It's a wonderful Caribbean getaway. And here's some photos of the property. You can see spectacular sunset ocean views from every room. All of the bedrooms are en suite. They all face the water. They all have views, both the bathrooms and the living spaces. And it's just a pretty fantastic property to get away to.
One of our newest additions is in the Mauna Lani Resort of the Big Island of Hawaii. We had a home in this resort previously. It was one of the early Platinum Fund acquisitions, and it was one of our highest demanded homes in the portfolio. Also, very good economics and just year-round demand. Not a super seasonal property like some locations. And so, as a result of all the demand, we ended up buying 2 additional homes there, one for Platinum Fund, one for Platinum Fund 2. So there's a total of 3 now. These are beautiful homes, walking distance to the Mauna Lani Beach Club, which is a private beach club with restaurant and chairs and really nice bay, great for kids and swimming and snorkeling. They actually have snorkeling trails there. The restaurant's really good. And then you're on the golf course and all the other resort amenities. So we're expecting huge demand for this home. and continue to see a lot of demand for Hawaii, especially from the West Coast investors. Here's a few more photos of it. So you have indoor, outdoor living, looking out over the golf course. We have this particular home has 3 bedrooms, so a lot of space for the family to spread out. You can also, if you have a bigger group, you could book 2 or 3 of the homes to bring an even larger crowd. So you could have 6 bedrooms with 2 3-bedroom homes, or you could add a 4-bedroom and potentially have 10 bedrooms if you were able to book them all at the same time. And there was a question I saw about, can you book homes from the other funds? And you absolutely can. So in addition to booking the homes, the 16 homes that will be in the Platinum Fund 2, you can book Platinum Fund, Villa Fund homes, and we'll talk later about Third Home and the Lead Alliance homes as well. Another one of our new additions is the home in Punta de Mita, Mexico. So this is 7 bedrooms, 7 bathroom. Again, some great indoor, outdoor space, amazing views. You have pools, outdoor kitchen. Also, there's a beach that has access directly from this community just down below. So it's, again, another great location in the portfolio. You can see more about the outdoor kitchen area, the views from the pool and the kitchen area.
The next property is a Reserva Conchal penthouse in Costa Rica. Costa Rica is it's also one of my favorite destinations in the portfolio, and we have had an equity platinum fund house in this area that's been one of the portfolio's favorite partner destinations. It's a 4-bedroom beachfront house, and given the demand for Costa Rica, we decided to add a second property in the same area. It's in the Playa Flamingo area of Guanacaste on the Pacific coast. Reserva Conchal is a spectacular resort right on the beach. Inside Reserva is the Westin and the W hotels. It includes a private beach club for property owners. So this penthouse, what we did with this acquisition was a pre-development developer negotiation. So we acquired the penthouse pre-construction. So we had preferential pricing, and this property is currently under construction, delivering summer or fall of this year. It's a 5-bedroom, 4,500 square foot penthouse with its own plunge pool up on the deck. As I mentioned about the private beach club, you have access to the beach club, which has its a beachfront restaurant, large swimming pools, and different amenities. It's also right off of Robert Trent Jones Golf Course and a fabulous tennis center that the resort has as well.
Just to expand on the pre-development pricing, so we put this one under contract for $2.1 million, and the last penthouse, similar penthouse that went under contract at 2.7. So we haven't even closed on this yet, and we've got a really great comp right in the same development.
And here's some renderings, as you will see, spectacular views. It's one reason we wanted to have the penthouse. The views are just unworldly from this top unit, very spacious, gorgeous views, but also a really short golf cart ride or walk down to the beach club from this location.
Next up, we have Mykonos, Greece. So this is a property under contract that hasn't closed yet. We expect it to close in Q1 of this year. There was a couple reasons we were attracted to Mykonos. One is when we did our investor surveys, one of the top destinations we would see requested in Europe was the Greek Isles. And number 2, we found that the Greek Isles offered some of the better cap rates we could find in Europe for beach properties. One of the challenges with beach properties in Europe is that the seasonality is more significant than you would see in Florida or Hawaii or Caribbean or Mexico. And so you're really getting most of your demand in the spring, summer, and fall. The home here is overlooking the neighboring islands, a large outdoor pool, and we're also adding 2 3-bedroom villas on Mykonos next door to this one that are also available. So if you were to book a combination of those, you could potentially have up to 11 bedrooms to bring a larger group, or you could book a 3 or 5 bedroom depending on the size of group you need. And here's just some more photos. We haven't had the final professional photos taken, so the top 2 are renderings, but it gives you an idea of the view and location and just the type of amenities. So here we've got our full portfolio. What you see here is the 35 homes owned or under contract. You have access to use all these homes. You can see we're well represented in a lot of the high demand places that we've heard from our investors. So one thing we do is we've done multiple surveys, and we'll continue to do surveys of our investors to learn where they would like us to own homes. And when the investment opportunities match the investors' desires, we really focus on adding those types of locations. And as a result, we've got, we're well represented on Hawaii, on the West Coast, Caribbean on the East Coast. Costa Rica has been super popular, Mexico. We've got Florida locations, Europe locations, mountain homes, and a place in New York City. We got asked about, with New York City, how we got around the short-term rental restrictions they put in place. We actually bought into a condo hotel project in anticipation of those restrictions. And in fact, we expect those restrictions to help us because it's removing inventory from the market of apartments with multiple bedrooms. So it should actually increase demand for what is in the market. And it's an amazing property. It's right on Central Park with views from every window of Central Park.
So another question was about using other fund properties. And Greg had mentioned that you have access to this whole portfolio. And yes, as an investor in the fund, you own the properties in your fund. And during the term of your fund, your money is working for you with the buying those properties and then selling those properties at the exit. However, we have seamlessly created an experience that allows you to use your credits in the fund to book the other fund properties. And we'll get to that, as we go through. Greg will give some examples on how you book properties. But we've really tried to make it seamless where you have access to the other fund properties, pending availability. And it's working very well. Our investors are cross-utilizing the properties and, at the end result, having this global portfolio accessible to them. So now we're going to go through some different home collections of Equity Residences so you can see the varying properties that you would have access to. This first portfolio is our Caribbean home collection. There is a gorgeous 5-bedroom home on the water in Chocolate Hole on St. John in the U.S. Virgin Islands. It's a very architecturally significant house. It was designed by a famous architect and well-crafted builder. So it's quite a statement piece on the water, and one of our Platinum Fund investors' kind of favorite places to get away in the Caribbean. We also have 2 properties in Turks and Caicos. One on Chalk Sound. It's a 5-bedroom house on the water on Chalk Sound. Chalk Sound is a spectacular getaway spot in Turks and Caicos. The waterfront home, you have access with paddle boards and kayaks to get out on the Sound. And then it's still an easy drive to Grace Bay Beach, on the other side of the island for other activities. This is also a partner favorite. In the lower right corner there is our second Turks and Caicos. It's a new acquisition. It's Thompson's Cove. It's a beachfront property. This was another example of value add for equity residences and how we buy right. We bought a duplex that was a two 3-bedroom duplexes, and have converted it into a 6-bedroom house on the beach. It had about 100 feet of white sandy beachfront real estate. And so we kind of took this duplex that was inside a gated community on the beach, and have turned it into a luxury home. You walk down the beach, from this house inside this community, and just a few steps down the beach are $10 million beachfront homes. So it really was a priceless piece of land. We added a swimming pool that the house didn't have, and this house is still under construction. It'll be delivered later this year. Also, we talked about Anguilla, both funds. There's a Platinum Fund and Platinum Fund 2 home there in Anguilla. That was another example of kind of concentrating and buying 2 properties, one for each fund. And then there's Little Exuma in the Bahamas and Cap Cana Resort in the Dominican Republic. So 2 more Caribbean options. The Cap Cana property is a golf course frontage property, a short golf cart ride down to a private beach club. And Little Exuma is a beachfront property in a private scallop beach where only 5 homes sit on this beach. So it's a great getaway for a secluded private beach getaway. The next portfolio is our Florida home collection. Captiva Island and Key Colony Beach in the Florida Keys. Those are 2 from our Fund 1 investment. So we've had those for a while. They've been utilized for quite a time. Captiva Island is sort of a getaway. For those that know Captiva, they tend to go back year after year after year. Same thing with the Florida Keys. So a lot of these homes tend to be, certain investors are booking them every single year for spring break and winter break, because these are their favorite spots to go. In the Florida Keys, we not only have Key Colony Beach, but we also have Islamorada, Florida. Key Colony is a single-family residence on a channel with a boat dock in the Middle Keys. Islamorada, we kind of pivoted and did a luxury 3-bedroom penthouse condo, inside a small resort up in Islamorada. And as you can see, it's fitted out very nicely. It was a new construction that we actually bought out of auction during COVID. Rosemary Beach, that's another kind of 30A favorite location of a lot of our investors. This is a house inside a community. It's second row off the beach. This was also a property where we did some upgrades and did some remodels after we bought it, and have this fantastic house kind of in the 30A corridor right off of Rosemary Beach.
Next up, we have Mexico and Central America. So some of my favorite locations here, we've got our Cabo home. It's just second, third row back from the beach. Amazing views of the ocean. You have own private beach access, and the home itself is amazing. You have a huge media room, game room. 6 bedrooms, amazing views, and it's turned into one of our partner favorites. We also have one in Acamal, Mexico, directly on the beach. You can actually kayak out to the reef, out in the water, tie up your kayak and go snorkeling. One of our newest homes is in Nuevo Vallarta, Mexico. This is also beachfront. It's one we collaborated with a developer on, and we're just bringing it online right now. Our Guanacaste, Costa Rica home right on the beachfront. That's been one of our most popular homes as well. That led us to add additional homes, which we talked about with Reserva Conchal. I mentioned there's a couple locations where we own homes in both funds, but it's not the exact same home. we might have two homes next door to each other, but they're each individual homes that are, one's owned by one fund and one's owned by the other. They're not co-owned. In Belize, we also have a waterfront home there, another great location for fishing and snorkeling. And then I talked earlier about our Punta de Mita home. Again, amazing views in a private gated community. In our Hawaii collection, we now have 3 in the Mauna Lani Resort and the Big Island. We talked about those a bit earlier. We also have Poipu on Kauai. So for those familiar with Hawaii, each island is very unique and different from each other. Poipu's a little less crowded, but more lush and very outdoorsy. Whereas Mauna Lani is very focused on resort and resort amenities. Although we do have a resort amenities in Poipu in terms of pools and gyms and beach access and whatnot, tennis courts. We've got the Big Island of Hawaii down on the Kona side with amazing sunset views. We've got a home in the Kapalua Resort in Maui, right on the golf course. And then also the north side of Kauai up in the Princeville area. A home that is a short drive to the beach. This one's not on the beach, but great access to the North Shore and the North Coast. And then our leisure homes. So we have a variety of leisure homes. We've talked about New York and Central Park. We've got Barcelona, which is undergoing a remodel. That will be a 6-bedroom home right in the middle of the city, and a really old, beautiful building. We talked about Mykonos, where we have a few homes coming in for both funds. We have Siena, Italy. So this is a home right in the old town. You literally walk out the door, you're in the cobblestone streets. The building itself was built around the time Columbus discovered America. So it's really old building, but it's been modernized with all the modern amenities, including an elevator and, heated and cooled floors and double pane windows and steam shower and, a chef's kitchen. We've got a ski in, ski out place in the North Star Resort of Lake Tahoe. Again, this is a pretty amazing experience. It's got its own private hot tub. It's got a beach club or a private club right next door where you have huge pools, hot tubs, gyms, media rooms, game rooms, etc. We've got a place in Deer Valley, Utah. This one's not ski in, ski out, but it's very accessible to both the Park City Resort and the Deer Valley Resort without having to get in your car. You can basically walk to the end of the driveway and the bus will pick you up and drop you off at the ski lift. And then we have a place at Vail, Colorado, a very large home there that can accommodate a really large group. And there we're not ski in, ski out, but 10-minute drive, and we have parking passes with the house, so you can park and right by the lift and walk up to the lift.
So one of the questions in the Q&A was whether we have liquidated any assets and what the returns were. And here is an example that answers that question, and it's our Deer Valley deep dive. So, this is a little unique of an acquisition, but it gives you color as to things that Greg and I, as managing directors, that as we look at the acquisitions, what we're thinking about. And Greg had already mentioned that the Reserva Conchal property, was already significantly up from when we purchased the property to the last sale. That's an example of the pre-construction. This was an example of kind of buying a distressed asset and then adding value to it, holding it, and then liquidating it at the right time. This dates back to our Fund 1, where we identified a 10-bedroom, 8,500 square foot distressed bank-owned duplex listed for $2.6 million. This is in Park City, Utah. We negotiated with the mortgage lender for a $1.8 million purchase, which was 31% below list, 43% market, and 30 cents on the dollar to peak values for this property. We completed upgrades for a total of $542,000 invested in the home. So the real estate investment was $2.3 million back in 2014. 90 days after purchase, the Deer Valley homes were valued at about 36% more than the fund invested. We held these properties. Investors, had ski vacations, and we had rental income from these properties since 2014. We listed Deer Valley A. So the duplex ended up being a 6-bedroom home and a 4-bedroom home. It's really a townhome style where they're stacked one on top of us. So the very, very typical Park City type homes where it's basically a 6-story structure that goes up the hill with 2 different units accessible from the lower level. So we sold the larger we listed the larger 6-bedroom at $4.5 million during the COVID mountain market peak. We had previously had buyers interested, and so we reached out and we did an off-market sale where we were able to apply commission to the sale price, require the buyer to pay closing costs and repairs. And in the end, we netted $4.4 million in cash proceeds to the fund. So it was 167% gain on book value and a 2.7x return of capital. Essentially doubled the initial capital investment in both homes with the first sale, and we still owned a 4-bedroom residence called Deer Valley B there in Park City. So, I mean, net, after a $1.8 million acquisition and a $2.3 million total real estate investment, we created $6.2 million in value back in Q2 21. That was 167% gain in 8 years. Created $4.4 million cash harvested for investors, and still a $1.65 million real estate value remained in Deer Valley. Now that was kind of post in 21. Today, that property is already still, valued at approximately $1.92 million for that 4-bedroom in Park City. So we held on to one asset and let it appreciate, and that fund is set to liquidate in 2026. This was an example of an early harvest. So although the funds are slated for 10 years, and one of the questions also in the chat was, when does that 10 years start? So the 10 year starts after the acquisition period. So we will acquire properties for approximately 3 years, and then the clock starts once we have your portfolio of approximately 16 homes in Platinum Fund 2, and then we have a 10-year hold period. Now, if it makes sense as managing directors to liquidate properties early, like here was an example where we could harvest significant gains for investors and return some capital, we will do that. And it's not the intent to sell early, but opportunistically, if it makes sense to harvest gains, we will do that. Conversely, if it makes sense to hold properties after the 10 years, the fund managers do have discretion at the end for another 2-year period to hold. So if the macroeconomic conditions don't make sense to sell right at that 10-year period, we're not forced to sell. So it's flexible, and it's why we say, look, it's a 10 to 14-year hold period, depending on if we sell a little bit early or we hold a little bit late. And at the end of the day, we're going to maximize your investment. And this Deer Valley example, is one where we really maximize for investors. And the story's not over, because we're going to sell this 4-bedroom in 2025, 2026, and the results for that acquisition will go up, even more. So from investment and returns, I'm going to pivot to lifestyle. And, this is, where will your investment take you? So apart from just having access to the full Equity Residences portfolio, you also have access to Elite Alliance and Third Home. So we have partnerships with affiliates that have global network of homes. And so you may choose to convert some of your usage in Platinum Fund 2 and decide to go to the Four Seasons in San Diego, or decide to go to the Ritz in St. Thomas, or Esperanza in Cabo. And all of these types of resort properties, as well as just other luxury vacation homes that you might find, they're all on these networks. And you have the ability, you will receive memberships into these networks when you make your investment. We will onboard you. We will, help you. You will then have dedicated folks for equity residences that work with Elite Alliance and Third Home and help our investors, navigate the portfolios. But all these trips you see here are kind of examples of trips that our investors have taken. I've personally, been to Esperanza a couple times. From San Diego, it's an easy, quick flight down to Cabo. And, before we had our own 7-bedroom house in Cabo right off the beach, this was a nice little go-to that you could book with equity residences credits. We've had investors go to the Four Seasons in Anguilla, Four Seasons in San Diego, and then also just book homes through Third Home, which you'll kind of see on the next page. It's a list of destinations. There are thousands of destinations. It's very global. Elite Alliance is more curated to high-end luxury resorts where you can get 5-star experience, like as an example, the Four Seasons in Aviara, Cabo, other resorts in Bend, Oregon. Third Home has both the luxury curated resorts and then also has a massive portfolio of thousands of vacation homes, similar to the equity residences portfolio. And we've had investors book homes in Breckenridge, book home in Japan to go skiing in January in Japan. Lots of European properties. So lots of the successes in booking homes across the portfolio. And it's a value add of our investment that from a lifestyle perspective gives you the opportunity to not just take vacations within our 30 homes, but trade out and have access to a global portfolio. In addition, Greg, I'll let Greg talk about homes being
So a common question we get is, will the homes be available when I want them? And so what we think is special and unique about our model, or one of the factors that's special and unique about our model, other than that it's one of the few true investments you can find out there in this space. But from a usage perspective, our model has a big advantage, and that is we effectively create 2 categories of users. So if you look at the club models out there, they're trying to, still get good asset utilization, try to fill the calendar. And so that calendar will typically, everyone's trying to get in and they're trying to use as many of the 52 weeks as possible. In our case, we planned on about 40 to 45% of the property use to be used by investors, and then another, say 40% of the property use to be used by renters. And so we can get good asset utilization while at the same time good access for the investors, because the investors can go in, pick the weeks that are important to them, and then we can fill in the gaps in between with the renters to bring in that income, offset operating costs, create a dividend potential. And so it ends up being a win-win for everyone. So the answer is, in general, absolutely, you can get the weeks you want. Our experience, having been through the reservation process for over a decade now, is that about 98% of the time, you'll get what you want. And part of how we do that is we go in a little more depth and ask what's important to you. So one person might say, I really want to go to Park City in February, but I don't care if it's the 3rd week in February or 4th week in February. Another person might say, I have to travel the 3rd week of March to the Caribbean. I want to go to the Caribbean, but I don't care if I go to St. John's this year and then next year go to Turks and Caicos, or vice versa, because over the course of 10 years, I'm going to go to both. And so because of that and putting together the schedule like a puzzle, we're able to accommodate almost everyone. In a rare instance where we're unable to accommodate someone, and again, this happens once or twice a year amongst our full investment base, we then turn to our affiliates, Third Home and Elite Alliance, and they oftentimes will have a home in some of those same markets, and we can help find and source a home that's a great alternative to the one we have in our portfolio. And then only when all else fails, we then have a rotating priority system to do a tiebreaker. So in the event that we have a reservation we can't accommodate, we effectively will take if we have 100 investors in year 1 of 10 years, we might take investor 5 before we take investor 15. But in year 2, the first 10 would move to the back, and you would start with investor 15 over investor 5, and then you would rotate in year 3 where investor 25 would go ahead of investor 15. So that over the course of 10 years, everyone has an equal position in that rotation. So the short answer is that investors do get the weeks and the trips that they want to take. In addition, we have bonus use. So within the portfolio that you're an owner, if a home is not available or is vacant up to 30 days out, depending on location, you're able to grab that week and it doesn't count against your usage, and it becomes a bonus to you on top of your investment. But not only that, with our affiliates that John talked about, Elite Alliance and Third Home, they also have the ability to book these bonus weeks on short notice, up to 45 days out. So you can, through those networks, also grab a number of weeks. And, in addition to having been to a number of our fund properties, I've traveled through both the Elite Alliance and Third Home networks. I've gone to Big Sky for New Year's. I've gone skiing at Mammoth Lakes. I've stayed in the Phillips Club in New York. I've stayed at the Ritz Resort on St. Thomas, amongst other places. And a number of those trips have been those short notice bonus trips where they don't count against usage. So it's a very valuable benefit in addition to your planned use. In terms of our team, we have our concierge team that can assist in planning your trips and with reservations. We've got a partner portal you can access. You're now able to view your credits. You can see credit values of the properties, availability, learn more details about the different homes. So our team is there to help you. Our team is available by phone, text, email, as well as through the portal. Here's some examples. So there's different credit investment levels. One of the investment levels, the 300 level. A 300 level investor would receive 300 annual credits. These credits can then be used to book trips. Why do we use credits? It's because not every property is worth the same value in terms of if I'm traveling for, at New Year's to a $4 million home, that week may be worth more than traveling in the summer to a $1.5 or $2 million home. And so the credit system allows us to equalize the number of credits or the value that everyone receives using the credits for their investment. So in the example of a 300 level investor, how might they use their credits? Well, they might decide to take a November trip to Anguilla and use 40 credits to stay at that 6-bedroom ocean sunset view home. In addition, they might then go to Vail and use 90 credits to stay at the 5-bedroom home there during President's Week and go, bring family and friends and go skiing. And then they might, for spring break, decide to go to the Bahamas and stay at the beachfront home there for 80 credits over their kids' spring break. And then they might, over the summer, decide that they want to visit New York and be there for the Independence festivities, and they'll spend 90 credits for that. That would be 4 trips that they would have taken during the course of that year. These are obviously just examples. But then they might also take a bonus trip on top of that through our Space Available or through Third Home or Elite Alliance. So there's really a lot of options about how you can travel. And some people, it's interesting, different people's circumstances are different. So some people want to travel Christmas and New Year's. That's an important time for them. Other people have no interest in traveling Christmas and New Year's. In fact, they might prefer to travel more in the slow season when it's not as crowded. And this accommodates those different desires. In terms of the value of those vacations, so if you would have rented those weeks at those properties, you would have spent something like $46,000 on these trips. But because you're an owner, you're an investor, you're able to do this with just a small visit fee we charge that covers the cleaning and setup of the home. There's no rent, no nightly fee, nothing like that. And you do have your annual operating fee, which we've talked about and we'll cover again. So your annual savings would be about $32,000. So now project that over the course of 10 years, and you're looking at $300,000+.
So another benefit of our portfolio is access to some private clubs. Here's an example of our homes that have access. So our North Star property has access to the Tree House, which is a phenomenal private club in North Star, right underneath the gondola between the base and and the Ritz-Carlton. Fantastic place. Our house sits right next to it, so you can walk from our property right over to the club, where there's additional hot tubs and a pool and game room for kids and sauna facilities. Great little spot. Eden Rock is arguably one of the nicest private beach clubs in the Caribbean. It's a fantastic 5-star beach club that our owners have access to. Short golf cart ride down from the house. Large swimming pools, bars, restaurants, and an amazing little private beach that Eden Rock has there in Cap Cana in the Dominican Republic. We've already talked a little bit about Reserva Conchal and that beach club, which again is on arguably one of the nicest beaches in the area. It's like a crushed shell pink beach, very famous. A lot of the tourists all go just to see this beach, see the beach in Conchal. And then Monolani, you have access to the Monolani Beach Club, which is also just a short golf cart ride from the house. Fantastic swimming beach for small kids. Great place to spend the day. Also food and beverage there at the beach club. And there's more in the portfolio. Apart from just then the private clubs, some of our residences have staff. Cap Cana is an example where there's an on-site casita with a live-in butler and maid. Also, optionally, a live-in chef is available. So you can have a chef for the week if you like, but regardless, Augustine will take care of you as your personal caretaker and butler while you're in residence. A lot of our homes have full-time housekeepers. So in Cabo and in Costa Rica, there'll be a full-time, daily maid service with a regular maid who will be there for you every morning. Dream Trips. This is something that our team has curated for all of our locations. So for all of our different properties, there will be an example dream trip that our concierge team has curated for you as an example of certain activities that you can take. So our team will help you curate these. Our local teams across each portfolio, there's local concierges and property hosts that will help curate trips for you. So it varies by location as to the resources that we have, but we're definitely there to help you curate and have concierge services across your vacation, and we'll present you with some options before you ever take a trip for you to kind of discover what you might like to do.
So let's talk a little bit about the investment. So the fund owns the residences outright. We were asked about debt, and the fund does have the ability to take up to $5 million in debt. However, both the Platinum Fund and the Villa Fund that preceded it are operating with zero debt. The Platinum Fund 2 currently has zero debt. In instances where we've taken on debt, it's usually been more as a bridge financing situation where we found an extremely attractive investment opportunity, and we didn't have all the available capital readily available to move quickly. And so in those cases, we took a small amount of debt as a bridge loan. That bridge loan was actually provided by our limited partners. So we didn't go externally for those loans, but we went to our limited partners. We said, who is interested in participating in a quick bridge loan so that we can acquire this opportunity? Now, we've actually never done that with Platinum Fund 2. We've always had the cash on hand for the acquisitions, but we did do that in a couple instances for Platinum Fund and Villa Fund. From an ongoing basis, we are operating these portfolios without any debt. So it's seen as more of a cash preservation play. If you're in a situation where you own a diverse portfolio of prime properties in a variety of locations without debt and flexibility on your liquidation date, then it gives you a lot of potential to drive a good return for your investors. Typically, the people that have had trouble or are leveraged are in a situation where they're forced to sell at an inopportune time, and then or just have assets that are not in desirable locations, and we don't fit any of those criteria. These are, prime assets. Greater than 90% of capital is what we target to put into real estate. We have a set time frame for the liquidation. So in this fund, likely between 2037 and 2039, and we raise money from accredited investors and buy the assets with cash for a few reasons. Often in foreign countries, you may not have a lot of other options, or the terms may not be interesting. Deals can get done faster. We've had situations where we've done all cash closes in a week because of the type of opportunity we were able to identify. And no debt means no risk of being underwater on the properties.
So, Greg, somebody asked what the total fundraise is for this fund and how much we've raised to date. Would you like to address that?
Yeah, it's a $50 million fund. We've filled about a quarter of it, so we expect to fill it out over the next few years, and we'll continue to buy homes as we fill out the fund. So here's the investment levels. We gave an example of the 300 level, which is kind of in the middle. It's a typical level a number of folks might elect depending on their circumstances. But you can start out at the 120 level. Our standard price there is $218,500, and go all the way up to the 480 level at $655,500. You can see the rough amount of weeks usage. It's a range because it depends on obviously the home you select, the time of year, etc. And then the annual vacation value you would expect and what the annual operating fees are. So with the annual operating fees, you'll see there's a range there as well. And the reason for that is you're able to return some or all your credits and reduce or eliminate the annual operating fee. Now you're going to get the best ROI for your investment if you actually take the trips and use the homes. However, let's imagine that in the course of the next 10 to 15 years, you have a year or two where you're unable to travel for whatever reason. Well, one, you're not going to be stuck then paying an annual fee for something you're not using, and you actually then have the ability to return credits to get a cash dividend based on the profitability of the fund. So the fund is really designed with a lot of flexibility in mind. You can use the homes, you can get dividends, you can go through our affiliates, Elite Alliance and Third Home, to the thousands of locations that they have. And then the investment level, a lot of times people will look at how they want to travel. Are you traveling more holidays or more off season? Are you traveling? How many trips do you want to typically take a year, etc. And then based on that, you can pick the right investment level for you. So some of the fine print, the annual expenses. So you have the annual operating fee, which for the 120 level investment is $3,960. You have a nominal visit fee It generally ranges from about $695 to $1195 for a week-long stay. That covers the cleaning and setup. That's not a nightly fee. That's for the stay. What is the vacation cost per night? Well, there is no nightly cost. However, if you kind of take the fees that we talked about in terms of the cleaning and setup fee, the annual operating fee, it could equate to an effective cost per night of anywhere from $114 to $585. How do you make money? So we sell the homes. You first get your initial investment back, and then your pro rata share of the 80% of the profits. So once everyone's gotten all their initial investment back, we start distributing profits. 80% of those profits go to investors, 20% go to the fund manager, and they go to the fund manager to really align our interests in terms of growing the value of the portfolio. You also get to enjoy those vacations, which, as we've seen, can lead to over $500,000 in rental value for a 300 level investor over a 10-year period. We talked a little bit about, will the homes be available when you want them? We have a personalized process, and we work with you to find something that meets your desires. And then how much do you get to use the homes? It really depends on your investment levels and preferences for location and season, as we discussed.
So now I'd like to give you an example just about the experience and the investment value that you get. And this is a specific example of our North Star residence that I described. And North Star is just a great example for us because that was, from an acquisition perspective, it was one of the examples of a early acquisition from the developer. And that example that Greg gave about Reserva Conchal was similar to North Star, and that we were the first buyer of a group of 6 homes that a developer was acquiring. And before we actually closed on it, because we negotiated extended close terms, other homes had already closed at a higher value than we had negotiated. So from a really smart acquisition, it also provides great value to our investors from a lifestyle perspective. And that's what this chart is showing, is that the value per night of this home is $2,700 plus per night during ski season. And if you pay all your full annual fees and allocate credits to book a ski season week, your essential cost per night, and realize this is not an actual cost per night because there is no cost to use these homes on a nightly basis, but amortizing your annual fee and your visit fees across the nights of this property, it'd be about $585 per night of your total annual out of pocket towards utilizing this North Star property. So as you can see, your cost is significantly less than if you were to rent this property in the value. Now, if you actually used your credits to waive your annual fee, your annual out of pocket is significantly less, and your effective cost per night then drops down to $128. So if you waive your annual fee, you can get significantly lower effective cost per night. Now, it also means you have less vacation. So from a true long-term ROI, most of our investors like to pay the annual fee and get more vacations at this effective discount, the $585 versus the $2,709. But either way, this is just illustrative of the value across the portfolio of our model. And how we do this is our rental income, right? And so we talked about the fact that we do rent these properties when investors aren't using them. And when our renters are using the property, they're paying the $2,700 per night. And that revenue is what offsets a lot of the cost of the portfolio and helps fund, the high cost of, insurance and property taxes and just operation of the residences. So this slide's got some quotes from some of our investors, and if as you're considering this investment, we're happy to put you in touch with some of our other investors. We have over 300 happy investors that have their own stories and testimonials. And so we're happy to share that. Our website also has lots of video recordings of testimonials of investors. So I encourage you to go to the website and hear straight from our investors about, why they chose to invest, because everybody has their own reason. One thing I'd like to point out here is that, this is smart money. These guys, in many cases, folks that invest other people's money and help people invest capital, are putting their money with us. Brian's a financial advisor in Houston. Kevin's a retired private equity fund manager in New York City. And these are folks that really took the time to understand our model and realize it was a great place to deploy capital for both a nice diversified long-term real estate investment, but then a place to get vacation value and experiences for the family. Greg, you want to summarize this?
Absolutely. So in terms of next steps, you would make a one-time investment for as low as the 120 level with a standard price of $218,500. You would receive your preferred return in the form of vacation usage at the luxury residences around the world. You have a no annual fee option and an opportunity to earn cash dividends. We have been asked if cash dividends have been earned in other funds, and the answer is yes. In our Villa Fund, they've paid out cash dividends most years. And our Platinum Fund, in the early years when we're raising money and acquiring homes, the funds, we don't expect them to pay dividends. Once the funds stabilize, that's when we expect dividends to start. And in the case of the Platinum Fund, it's adding its last remaining homes this year. So we expect to start seeing a positive cash flow from that fund as we go into next year. There's long-term capital appreciation. We expect a 1.5x return on capital. That's what we're targeting. We're obviously working towards overshooting that. It's a diversified investment through holding a diversified portfolio in a variety of locations. So you're diversifying not only your investment dollars, but you're diversifying your vacations. If you were to own a home yourself, you're kind of going back to the same place all the time. Here you can either go back to the same place if you want to, but you can also go somewhere else. And then you get the added value from the short notice vacations. We're going to jump into Q&A. I know we're running a little late, so we don't have a lot of time, but I'd like to try to address a couple questions. We had someone ask here if we've ever had a capital call. No, we haven't. The funds, they do carry reserves. We are insured. So if we have, any kind of natural disaster, we have insurance for that. If there's a deductible that needs to be paid, we have reserves to pay that. And one advantage of the shared ownership is if something happens to one home and there's one small deductible, in the big scheme of things, it ends up being minimal. Another question here is, folks are asking if they can bring friends or family. So you can send friends or family on one of your vacations. You don't have to always be the person who travels, as long as we have at least, someone 25 or older. We have a question about our reporting obligations. So we are audited. So these are audited funds. We receive an annual auditor report, which we then make available to investors. We also have an annual webinar for investors to provide them with an update on the performance of the fund and the status and growth of the fund.
There's a final question here about investment in the current market, which is a good one. And it is challenging in this current market to find opportunities. But Greg and I have been doing this since 2012, and we get pretty creative and we get patient in markets. And it's why we've kind of, describe to you the type of opportunities that we're finding, which is, the pre-development developer negotiations, the value add, taking a duplex and turning it into a 6-bedroom. So given the current real estate market, we are having to really be smart, be thoughtful, be patient, and we're finding those gems and those opportunities to create value. The Anguilla one, we talked about it being value add, but it was also a distress sale because that resort had just changed hands. It had been closed during COVID. It had been closed because of a hurricane prior to COVID. So the resort had been closed for 3 years. A new owner came in and acquired that resort. And then we negotiated with the new owner, bought 2 of the villas out of them at a $2 million price point each. And they are currently listing the other villas for 2.5, and those are 5-bedroom villas. And our villa now is a 6-bedroom. So it's worth, above 2.5, maybe 3 million. But we have a 10-year hold now on that property to eventually sell it, at a significantly higher value. So it's those types of opportunities that we're finding. Reserva Conchal pre-construction is another great example. And we'll be doing that for Platinum Fund too. And so depending on where we are in the real estate cycle is how we have to make these acquisitions. But we're still buying smart and creating value for investors.
All right. Well, thank you everyone for joining us. If we weren't able to get to your question, we'll try to reach out to you and address it following the webinar, and appreciate your time. We hope that you like what you heard and want to join our investment funds and the 400 plus other investors that are currently enjoying trips all over the world.
Yeah. Thanks, everybody.